Mihir Vora, Director and Chief Investment Officer of Max Life Insurance. Mihir, good morning. Thank you very much for dropping in. Well, how's life looking for equities in the first half of 2017, you think? Will we still be reeling under the negative corporate results because of demonetization?
I wouldn't say we'll be reeling, because a lot of the reeling is already happening as we speak, so to say. But yes, not all the analysts and not all the investors have really cut earnings estimates aggressively so far, which I think should happen in the next 3 or 4 weeks as we go into the earnings season. And probably the next 3 months might be a good time to start looking at stocks which you kind of missed out the last time around and wanted to buy in any case, good quality stocks, structural growth stories that we wanted to buy, where now they're pricing in a lot of negatives. So I would say some more time to go, some more downside in the market over the next few weeks, but next 3 months would be a good time to start building the portfolio.
Okay. There's clearly been a lot of dislocation in the markets globally as well as domestically. For 2017, could you give us the top 3 themes? For instance, towards the end of the year, e-governance companies, etc., has also emerged as a big theme. As we stand at the cusp of 2017, what could be the big 3 themes to play?
So as far as India is concerned, 2 years back, we were of the opinion that infrastructure spending, especially led by government and private sector spending, will be the key drivers. But that's not happened to the extent, that one expected it to happen. The other theme that had developed was strong rural and urban consumption, which I think will continue. So the setback that we've seen over the last few weeks is temporary, and urban and rural consumption should continue to be the themes that one should play.
Okay.
The emerging sectors like fintech and the e-governance, etc., are good sectors to be in, but my guess is most of the opportunities are still not listed.
Yeah.
They're still in the PE space, so to say.
The digital space.
The digital space, yeah.
So urban and rural consumption is going to be the big play for 2017.
Absolutely.
Okay. Mihir, you said that now is the time to pick up the long-term stories, the structural stories. What are these structural stories?
So pretty much the same as what we've seen over 2016, which is public sector banks, for example, giving away market share to the private sector banks as well as to the NBFC space, including the microfinance space, etc. Of course,
so private sector, NBFC, and especially microfinance NBFC would be your pick?
Absolutely. And of course, the general consumption stories, especially on the discretionary side. And now in this last couple of months, even the FMCG space, which we thought was quite expensive, has corrected decently. So in the consumption space, many more opportunities are opening up compared to, say, a couple of months back.
In the consumption space, how would you play it? Because there are the likes of Jubilant, Foodworks, etc., where the business model to some extent has been disrupted because of what's happened, and the stocks have gotten derated. So in consumption, it's a very broad theme. So if you could elaborate a little more.
So in consumption, we have typically been looking at the underpenetrated segments and segments which have shown...
Which are the underpenetrated segments?
For example, vis-a-vis two-wheelers, we would be more bullish on cars.
Okay.
Because the underpenetration in cars, for example, relatively is much higher than the two-wheeler segment. Within the two-wheelers, probably we look at some of the companies which have succeeded based on certain niche segments and have delivered consistent growth. So broadly speaking, while consumption will remain a theme, we would then pick and choose the segments which are relatively still underpenetrated and have much more leeway to grow in terms of per capita consumption.
So cars is one underpenetrated. Any other segment in consumption where...
See, I would say that the NBFC space is also linked to consumption. So whether it's in terms of durable financing, car financing, auto financing, loan against property, personal loans, etc. These are segments which are still underpenetrated. So that can continue to grow for a while.
Is there money to be made in bonds in 2017?
Yes, probably not as much as in 2016, but still there's some juice left. We do expect a couple of cuts in the next year, rate cuts in the next year, which would leave some juice in the bond markets too.
Okay. Yeah, sorry.
You spoke about a downside in the markets in the next few months. Oh, how much could it be, if you had to make a guess?
My guess is, very, very difficult to guess, because it's not only a function of our local factors, but also a lot of moving parts globally. We have the new US president coming in and probably announce a major shift in policy direction that we've seen compared to before. You also have some, the French elections in the middle of the month. And the biggest issue is that the dollar continues to rally, the yuan continues to weaken. So there are a lot of moving parts. Probably difficult to put an absolute number. But if things don't get, within course 2 destabilized, I would say maybe 5% is what we are looking at the max, as far as India is concerned.
7,500.
Yeah.
Would you bet on, the IT pharma variety, those that are exposed to the US markets or global markets?
See, let's look at the two separately. IT, we've been structurally not so bullish on because we see that the segment has grown to a size where it has run into a growth wall, so to say, saturated. So against the 15 to 20% growth sector is probably now a 10 to 12% growth sector. So it's a sector one would hide when one is not so bullish on the market, but not really take a 5-year view on unless there's some disruption in the business model by the big companies. And in pharma, I don't think we are still past this FDA general issue that has been plaguing a lot of the big and small companies. So again, with the fact that the new president is likely to keep a pressure on drug prices, that's another sector we are underweight on, I would say.
Why do you think the weakness in our markets could be only in the in the early part of the year? Because if the dollar continues to strengthen, so what changes in the, why do you believe we need to be cautious only in the first half or the first quarter?
The first quarter is a couple of events. One is the fact that or our view that not all of the negatives of the demand slowdown have been factored in. That's the local factor. And we have to wait and watch what the new, the regime in the US shows us in terms of policy direction. So these are two clear, visible points that one needs to take care of in the next 3 to 5 weeks, so to say. So that's the reason why we are saying that for the first quarter, at least, one needs to be cautious. And then if things don't pan out as bad as one expects them to be, then probably it's time to then start building a portfolio, because markets have corrected significantly. Some of the stocks in the consumption space, in the financial space, are already down 30-35%. So value is beginning to get created in the market. So it's time to start looking at building a portfolio when there is negative news, I would say.
And actually, Reema asked you this question, but I'm just wanting to persist with it. The market is perilously close to 8,000, 8,029. What is the kind of downside? I mean, we have a budget hope to support us, perhaps, but nevertheless, how much can it go? I mean, in January itself.
Yeah. So as far as the the broad index like Nifty or Sensex is concerned, probably we are looking at a 3 to 5% earnings cut. So that's the kind of downside.
Earnings
that probably,
cut. But before the budget, can the markets, can the Nifty go to what, 7,500, 600, or do you think that most of the bad news is already there?
I wouldn't be surprised if they touch those levels because you see FII flows continue to be negative. Even this late in the year, one would have assumed that after the 15th of December, when people are supposed to go on vacation globally, one would see a slowdown in the negatives. So that's something which has not yet happened. So that's a bit of a surprise, I would say. The good thing, of course, is that local flows are very robust. Insurance companies, mutual funds, etc., continue to get inflows, and that's what keeping the markets up. The question to ask is, if the market continues to not deliver for the next couple of months also, then will the local sentiment continue? So that's the moving part.
That was actually good. The question I wanted to ask you, how have the flows been at your end so far? So, has anyone been disappointed by the market performance?
No, not really. Our investors tend to be long-term investors. We get regular renewal premiums and all that, as far as insurance is concerned. And even on the mutual fund side, we have seen SIP books are quite robust. I don't think people are cancelling their SIPs or anything like that. So that momentum should continue. The 3,000 to 6,000 crores a month that we get in SIPs and insurance products put together, that should continue.
Okay. Just one final question from my end. The budget, we are expecting some kind of SOP, some kind of stimulus. Ahead of that, is there any particular sector or stock that you would recommend a play on? Because the government could look at the elections, etc., and then decide to come out with some kind of SOPs and stimulus.
My guess is that the budget will probably have, as you rightly said, some kind of a mass bias, so to say. So you may see announcements, the usual announcements in terms of mass housing, rural housing, etc. So those are the segments one would play on, and that means is mostly in the mid-cap space, small construction companies, mid-sized construction companies, people who will execute that. I don't think it will make a huge demand to cement consumption, because cement consumption is still predominantly driven by rural housing, and that's not going to pick up in that much of hurry, so to say.
Okay, so that's not one of your top buys. Yes. All right, Mihir, it was a pleasure speaking with you. Have a great 2017 yourself, and let's hope it is that way for the markets.
All the best to you too.
Thank you.
Thank you.
All right. At the moment, the markets are not in a fine place. 8,025, so perilously close to 8,000.